Feels like a Monday. Just waiting right now for YouTube to switch over. There we go. Let me post the link for you all. And we can really have some fun around here. There we go. There we go. And we are live. Good morning, Thomas, Dr. Serena. Well, you guys are nice and early today. I love it. Brian, good morning. Thomas, good morning. Let me just switch off my camera so you guys can see my screen, because staring at my face is not going to get you far this morning. We got Wayne, we got Omar, we got Cam. Good morning, Cam from Florida. I'll be stopping by in the afternoon today, Cam. Visiting you guys. JB, Jim, good morning. Jody, good morning. Now, remember, I told you guys something interesting. I said that institutions are going to come in. I said usually they come in towards the end of the week. I wasn't expecting them to come in Friday afternoon. I was actually expecting them to come in Thursday morning, but better late than ever. Let's see here. Am I live? Am I frozen? What's going on here? Let's see what's happening here. Okay, there we go. All right, you guys should be able to see me perfectly. Good morning, and good morning, everybody. Hope everybody had a great weekend. Before we begin, remember it's June, and I've got 5 stocks that are about to enter their wealth windows, and I'm going to be revealing it on Wednesday live at 1 p.m., and I don't want you guys to miss it. Moondog is in the house. Steve is in the house. Paul's in the house. Dave's in the house. All right, we've got over 100 people here. Let's begin. And for those of you who were, by the way, for those of you who were in my class last week, the full-time trader, I want to thank you all for such nice feedback and such nice words. It was a big success. I got some really good feedback over the weekend. People loved it. Somebody actually caught the fact that I was using the Socratic method, which is the method you use in law school to teach you guys. That's the way I was taught everything. So it really is the best way. It's the way to get you guys to think for yourselves. And that's how I teach. I teach with the hope of having something the window started spinning in here, or something started spinning in there. So hopefully that's working out. Glad you guys liked it. And today, Matt, as soon as Matt gets in, he's going to upload Brian's code into the members area. Maybe make a couple of videos for you, and we'll get you guys going. But I'm glad you guys really liked it. I told you it was going to be a good thing, and I told you it was going to be worth your time, and I think it was. All right, so let's begin. Let's talk about everything today. And lastly, a few things. Let's see here. A few things. VIP room at noon today, as usual. And remember, Wednesday at 1 p.m., I'm doing something very special. All right, Kirk, Mazen, Carrie, Dave, good morning, and good morning all. All right, let's talk about the markets now, finally, should we? So we got a nice little boost Friday. Institutions did come in. They were waiting till the last minutes, those rascals. I knew they were going to come in last week. It was just a matter of being patient. Our patience. Notice I had a lot of long positions all over different programs that I told you guys not to liquidate. I told you guys to hold on. I told you guys that the market is not, and I told you guys to hold on to the volatility, that the volatility is normal. Now, I want to explain something to you guys. I want you guys to understand this. This is going to be the most important lesson you're going to learn here today, okay? Now, what happened Friday afternoon? This is Friday afternoon, right? This is the stock market Friday afternoon, right here. I mean, institutions just bid it up like there was no tomorrow. Institutions finally came. You know what's strange, though? I got at least 10 emails asking me why that happened to their favorite, not to the market, to their favorite stock. The email was, Roger, why did my blah, blah, blah stock go up like crazy? Why did all my shorts go against me? What happened? What happened to my stock? Do you have an answer for me? And you know what my answer to every one of those emails was? Go back and check the intraday data on the S&P 500 for the second half of the day and let me know if you still have that question. Because what do I always tell you guys? Markets first, markets first, markets first. What did the market do Friday afternoon? Why would there be any surprise at all? Why would there be any surprise at all that all your favorite stocks rallied Friday afternoon? Your stocks are like individual waves of an ocean. The ocean is the S&P 500. If the S&P 500 has a storm, do you think the waves are going to get bigger? Of course they are. So this is why I have at least two screens of the S&P 500 right on the upper right side of my screen. Good morning, Eugene, Wayne, Thomas, Dizzy, and Carrie. My point is, if you're just looking at your stocks, and if you're not looking at your stocks in comparison to the S&P 500 every minute of the day, then you're not going to understand why your stocks are doing what they are doing. Okay? Very, very simple. You're not going to stop looking at your stocks in isolation. Your stocks are all children of this universe right here. This is their mom. So if you want to know what the children are going to be doing, keep your eye on the mom and the dad, okay? Good morning, Gaston. No, it wasn't short covering on Friday. It was institutional capital coming in finally. Finally, for the first time last week. Last week, most of the trading action you saw was retail trading, trying to shake things up. I finally figured out the new chip maker. All right, Michael, good for you. All right, so as you guys could see here, the NASDAQ is up big. Speculative stocks are up big. The Dow is lagging, but not lagging all that much. And the S&P is meeting us in between. Overall, I think we're going to see some volatility, and I think we're finally going to see a lot of institutional trading capital come into the market. In terms of Fed data this week, you've got PMI, you've got manufacturing. This is an important report, and it's coming at 10 o'clock. Good morning, Susan. Tony, good morning. We got construction spending, so we have a lot of reports, but they're not coming out at 8:30. They're coming out after the market opens. As you guys know, we don't take action until 10 a.m. Tomorrow, we have the JOLTS report, also an important report, and we have factory orders. These are all interest rate sensitive reports, okay? We also have the ADP employment report, which is going to infer Friday's employment situation, and that will give us something to work with. Then we got productivity, the jobless claims report nobody looks at. The big report is going to be the employment report and Fed speakers. This week is not going to be as fragmented as last week. Oh, me too, Tony. This week is not going to be as fragmented as last week, and I need to schedule the last session of our live class. I think it'll be on Thursday. I think Thursday we'll have a good opportunity. I'll see. I want to make sure we don't have a webinar that day. So we'll see when we want to do this. But I definitely want to have that live session this week sometimes with you guys. And I'll schedule it sometimes, hopefully today. But we do have a lot of Fed data this week. It's not huge data, but there's a lot of, like, for example, the ISM manufacturing index, that's big. Construction spending, that's pretty big. ISM service index and ADP report and JOLTS, these reports can actually move the market. And the hedge funds are going to be looking at these reports, and institutional traders are going to be looking at these reports like there's no tomorrow. Good morning, Rebecca, Julian, and everybody else. All right. What about earnings and implied volatility? I didn't give you the full sheet this week because we don't have that many earnings this week that you guys need to focus on. But what I'll do is I'll give you this. I'm posting it in the chat right there, and that'll give you the sheet. Good morning, Sergey. That'll give you the sheet that we're looking at right now. And this will tell you all the big stocks that are coming out with earnings this week. The big one is going to be on Wednesday when we've got Lulu and Dollar Tree. Retail. You've got computer stocks tomorrow. This is tech, HP and Crowd. And Thursday, you've got DocuSign. But it's not going to be a big week. I don't know. I'm getting mixed results. one of the trades that I'm starting to do in the pit is time spreads. And I'm getting like really, really mixed feedback from folks. And I think it's going to be one of those things where you really need to be better at a little bit better at entry and exit to get in. So I'm still going to experiment with it, but I'm going to be a little more careful with it because I don't want to get people screwed. So because again, the feedback is mixed. For every person that's getting 50% gains, I'm getting people who are getting losers, and I don't want that. That's not fun. So I want to make sure that that's why we do things. That's why we experiment before launching something and making asses out of ourselves. And I do appreciate the feedback on the time spreads from all of you. So again, Wednesday's going to be the big day. Tuesday's going to be a big day for tech. Thursday's going to be DocuSign, which is not really, but this is it. Maybe we'll do some earnings plays. I don't know. Earnings are almost behind us. There's not that many earnings days behind us. Okay. So we're going to be starting the new season in just about 3.5 weeks. And next week is going to be a big day, big week for the Fed. We've got CPI and PPI. All right. Now, commodities, crude oil. Crude oil is literally bouncing again off of that key level that I told you and warned you about. By the way, I added the quarterly VWAP and I added the year-to-date VWAP here. The orange is the quarterly, the pink is the year-to-date, and the red is the 8-day moving average. So the fat lines, the thick lines, the blue, the brown, and the green, that's the 250 and the 100-day. 50, that's the 50, that's the 100, and that's the 200. In terms of the little lines, the thin lines, the squiggly lines, the orange line is the quarter to date VWAP. The red line, pink line, excuse me, is the year to date VWAP, and the blue line and the red line is the 8-day EMA. All right. Exactly, Rebecca. Yeah, but a lot of folks don't want to pay for trade, and they don't want to do that. They don't want to do that. This is on bar chart. Yeah, I just wanted to put this on bar chart for you. You can just create a template for yourself on bar chart right here. Template right here, manage templates. And you could just go to, like, it's called Roger's demo. And I go here and I fill in appearance right here and studies. And that gives me all those studies that I want. You could do this yourself. It doesn't really cost much. They have again, we could not get out. That's what I'm saying, Ray. That's what I'm saying. Too many people are having issues with it. I'm getting emails. Hey, I got 50%. Oh, I lost 10%. Like that shouldn't be the case. So I need to work with you guys on them, or just forget about them, because I want to make sure that everybody gets the same result. I don't want to launch or give you guys something that's going to be frustrating everybody. All right, crude oil. We're right now right at that value area. And if we start breaking, and I don't think we're going to be breaking, but if look at how we're bouncing off of this. But if we start breaking, the next level is right here. So if we start really breaking this, we're going to see some downside on energy prices. Gold is trading below the all the VWAPs, not all the VWAPs, not the year to date. The year to date VWAP likes the 100-day moving average. They tend to move the same way. They tend to be aligned. But look at the yeah, Rebecca, I agree. And look, if I ask you guys here if you want me to give you if you're making money on those time spreads, 50% are going to say yes and 50% are going to say no. And they're literally, you guys are getting out at the same time. That's going to make me look like an asshole, excuse me. But you guys know what I mean. That's not going to make me look very good. Also, imagine somebody's getting out 50% profit and you're taking a 10% loss. You're going to get pissed off. So we need to have, like, when we do our individual trades, everybody gets out, everybody gets in. There's no monkey business there. So I want to make sure you guys got it straight. It's a great strategy, but you got to know how to trade it right. And I'll probably have a session on it later this week or maybe next week, because we have a pretty full week this week. So gold is breaking the 50-day moving average. This is not good for defensive stocks, okay? This is not good for defensive stocks, and this is not good for defensive stocks. Typically, when energy prices and crude oil goes down, that's a good time for speculative stocks. Crude oil and energy are defensive. They tend to go with blue chips, and blue chips don't seem to be loving this. And boy, oh boy, did the tech rally come back hard. Futures, let's look at bonds. I forgot to post bonds here. Let me just really quickly post them for you. It'll just take a second. 10-year. Okay, here is the second. Okay. So here is the bond market, and you could see how the bond market is starting to get to go up, which is completely opposite of what it should be doing. Now, this is the part you guys need to focus on. And this is the part where we can make some money. I'm expecting the bond market to peak out around the 200-day moving average. I think it'll go up a little higher, which will give tech stocks some support. But I think it's going to peak around the 200-day moving average. Can win paper trading strategy doesn't bode well for going live. Exactly, Cam. Exactly. Well, here's the thing, Cam. I urged everybody literally 100 times to do it on paper. But a lot of people don't do it on paper. That's on you. But if you're not going to do it on paper, then be, warning, be careful. But yeah, that's the problem. Most people can win the strategy. Everybody wins on paper. They can't win it with real money. They can't get out of the trade. Unless they spread out, unless they do it individually, and then it gets too hairy, and then everybody has different results. But anyways, let me work on it a little bit, okay? So you guys can see right here the bond market's going up. Okay, well, the bond market's going up, which means the odds of the Fed lowering rates in July is increasing, which means that little ratty kid, snotty-nosed kid, is starting to get his hope back up. All right. Mark, bonds move opposite of interest rates. They are inverse to interest rates. So interest rates are going lower when bonds are going higher. Yield is lower this morning. And it is a direct correlation, by the way. So yes, one share is the best way to do those pesky spreads. Okay, so you see how the bond market's going up? Well, why am I so confident that the bond market's not going to go higher? I'll show you why. Because look what it's pricing in. Remember last week it was pricing 10%? It's pricing in 14.5% that they're going to do it in July. Now, you and I and everybody else, except that stupid kid, know that the Fed is not going to lower rates in July. So the fact that this is increasing in anticipation of July, to me, is foolish. And everything we know, the Fed is going to come in and talk about things. And I think they're going to lower the odds because we're not going to get lower. We're not going to get a dump interest rates going lower in July. That's an impossibility. I mean, heck, we're already on June 3rd. I was telling you guys this a month ago. Now we're a month ahead. It's not happening. So I think the good news is going to drive the kid to madness. And once we get to around here, the 200-day or the 100-day and the annual VWAP price level, the fair pricing level for the year, which is this pink line right here for bonds, I think bonds are going to start cooling off. So as bonds go higher, I'm going to be looking to potentially later in the week, once we get close to the 200-day moving average or maybe a little bit above, I'm going to start looking to maybe shorting bonds and or selling bear call spreads for weekly cash flow. I'm just giving you heads up because I did not think the kid is going to, at this point, start still thinking he's getting it on. I thought by this time, all his best friends were going to shame him into understanding reality. Exactly, Junior. Exactly, Junior. I like Junior Bodine. I see. Where's Senior Bodine? That's what I'm thinking, Sylvan, which means this will go down, not up. So I think this is insane. I think this is insanity. If I was a value investor right now, I would be selling bonds as they're. I'm not a value investor, but if I was, I would be selling bonds right now, like 100 shares at a time, just averaging into the price in anticipation of them going down. But I don't do that, and I don't advise anybody do that. But I would be doing that, especially as we get closer to the 200-day, because here there's a limited time to this. Remember, July is July 31st. There's only X amount of time for this to get to zero, which means this has to go down for this to reflect zero. See, for this to be zero right here, this has to be down here. And we only have, It's like an option that only has X amount of time to expire. Because if this gets to zero, there's no way this could be going up. It wouldn't make any sense. So it's almost like it's not a sure thing because I mean we don't know what the Fed's going to say but based on everything we're hearing and everything we're hearing, do you guys think there's a 14% chance they're going to lower? I mean, it already went down to 10. So I think the odds are zero. I mean, look, 0.1 because they're going up. And we know it's not going to happen in the next week. So this is complete bullshit. Excuse me. This is complete BS. The bond market going up here, and there's going to be. I'm going to be starting to put in some positions as soon as we get here. But I wanted you to understand why. If you don't understand why, then the trade doesn't make any sense because there's a certain time limit to this trade, to the bond market going down. It's not like, oh, we can wait for a year for the bonds to accept this. No, this reality has to set in before the July meeting, and that happens July 31st. So there's a time clock. Right, Junior, exactly. I want to know where Senior Bo. What did you do with Senior Bodine? All right. Let's continue. So we talked about crude oil. I'm not liking this, but it keeps bouncing off. Probably going to continue moving from 80 to 76 if I had to bet, because it is bouncing off. But if it starts breaking this level, that's a huge value area. And now it's built a huge value area here too. So if we break from this value area, you are going to see, yeah, that's right, Henry. You're going to see cognitive dissonance on the entire commodity market. And also, I don't like the fact that gold is trading below the 50-day moving average. I don't like that. Volatility, stock market volatility. I warned you last week that we need to go below this level. We need to break this level. I drew this line for you last week right here, this green line. We broke that level. Remember, I drew this for you and I said nothing good's going to happen until we break this level. Well, guess what happened Friday afternoon? We broke that level and we went lowered. We went lower. So the question now is, are we going to come back to this level right here, or are we going to come back to this level? Keep your eye on volatility. As long as we don't go above 1370 on VIX, $ VIX, we should see a bullish climate today. Yeah, well, it's not reflecting. It's not reflecting, as you could see here. It's not really reflecting much, helicopter gal Penny. It's not really reflecting much in the price of crude oil this morning. I mean, it's not bad or anything, but I'm not really seeing anything. I'm not suggesting crude oil is going to fall off a cliff. Crude oil has been very, very choppy. Look, this is the 100 and that's the 200-day moving average. And that's the quarterly VWAP and that's the annual VWAP. So basically what crude oil is telling us right now, it's just kind of sitting at a price range. It's looking for a catalyst. It doesn't have a major catalyst one way or another. And I think the major catalyst is going to be the economy. But when you start seeing all the moving averages together and when you start seeing the VWAPs together, that means we're pretty much at value. What did I say here? Value area. We're right at a value area. Now, if you took my class last week, you have a much clearer understanding of what I'm talking about in terms of where price is supposed to go. But right now, it's a value area. It's not high or low. It's kind of where it's kind of just trickling around its value area right now. You know, all the goodies are right here. We're literally touching all the goodies. The year to date, the quarter to date, the year to date, the moving average, the 100-day. It's all we're just kind of in between. And again, we're in a value area. So I don't think we're going to see anything major from the energy sector in the near term. As I mentioned, volatility looks like it's on its way down. The market, we have a full house in terms of liquidity today, full institutional capital behind us. So that's really not an issue. Looking at the S&P 500 on a daily basis, we're looking really good. We're already trading above this key level here. On an intraday basis, the levels we need to watch today are going to be 525, and I'm going to add another level here because we really couldn't go above this level very much right here. So the levels for today that you want to watch is 531 and 525. And I update you guys during the day. On the QQQ, those levels are, and here, I'll update you here, right here. Seems to be a value area right around here. The levels we want to watch on the QQQ are 450, 458. And on the Dow, we got to be really tricky with because Dow couldn't get it up on Friday. I mean, this was it. Let's see if Dow can get it up. This is a little too much too fast. And I think what's going to happen is we need to start seeing the markets come in line. They've been really out of whack the last 2 months. And that's been really hurting me because it's hard for me to gauge the market when the NASDAQ is up 100 points and the Dow's down 100 points. It's very, very hard to really get a good, clear idea of strength. We need in order when I buy a stock, I need to see everything line up. And if I'm seeing the Nasdaq down 100 points, because then you're asking yourself, who's going to pull? Is the Nasdaq going to pull the stock market, the rest of the market higher? Like Friday, the Nasdaq completely pulled the market up from nothing, right? So, thank you, Junior Bodie. That's funny. So again, uh, we it's much easier to trade for me and for most people when you're seeing everything align. It's very hard when you're seeing blue chips down 100 points and tech up. Where is strength? Who's going to pull each other up? It adds another layer of uncertainty. And you guys know how much I like uncertainty. Oh boy. So the level right now in the Dow we need to pay attention to is 39,000 and 38,500. 39,000, 38,500. Keep your eye on those levels. I'd love to see the Dow go up about 39,000 because it would show me that a lot of the blue chip stocks that were rallying are going to be coming back. When there's a mixed reaction in the indices as sector rotation, yes, or sector fragmentation. Or sector fragmentation, which is actually what I'm about to talk about now. So what happened when the market was going down? What happened when the S&P, when everything was going down? What happened when we were coming down here gently? Well, let's go back here. Let's go back a week ago, and let's go back one more week ago, May 16th. So May 16th, let's look at May 16th. This is May 16th. So May 16th, the stock market stops going up and it just consolidates and starts going down, 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 but very gently, right? The stock market goes down very, very gently. So at this level here, I'm just showing you something interesting. This is 2 weeks ago, okay? Semiconductor, Bitcoin, technology, QQQ, retail. The only thing that's really out of whack here is consumer discretionary. And then a week later, let's go 5 days back, okay? 5 days back, they really line up because the market is now up here, right here. So it had 5 days, the market's just doing nothing. It's not going up, it's not going down. So the market is developing value right here. It's just developing value. So look at what happens. In line, in line, in line, in line, in line, in line. The only thing out of line is consumer discretionary and maybe one more. Everything else is in line. And then the market starts breaking down and coming down more aggressively the last 3 days. And now it starts coming up. It starts developing. It starts distributing value, not building or developing value. It starts distributing value. In other words, imagine somebody painting. They're painting like this. And then they start painting like this. Okay? So look at what happens to the market now. This is where we are right now. It's a big mixed bag of nuts. Semi-speculative, defensive, semi-speculative, speculative, semi-speculative, speculative, semi-speculative, defensive, highly speculative, very defensive, very speculative, mixed, very defensive, highly speculative, very defensive, very speculative, very defensive, very speculative. Look, you've got technology, Semiconductors, look how far away they are from each other. Then look at consumer discretionary. Then look at communication services. This is like as fragmented can get. You get semiconductors next to consumer staples, and then consumer staples is next to Bitcoin. Then you've got communication services next to real estate and home builders and Russell 2000, and consumer discretionary is here and retail's down is there. You can't get any more fragmented than this. And that's what happens when markets really move. So if you have 5, 6 days like this, 5, 6 days like this, I mean, this has been a very difficult market to trade because the market hasn't gone anywhere. So we're just staying in one place. But when you see something like this, here, look. When you see something like this, you're going to have a fragment. You're going to have everything together. And then when you start seeing this, all bets are off. So right now, markets are definitely distributing. Value is distributing, and the next major level you want to pay attention to is going to be 531.21 on the S&P, or 525 on the S&P. And remember, Mondays are typically a rotation day. So maybe we'll put some swings today. We will see how that goes, okay? All right. We talked about the bond. We talked about crude oil. We talked about implied volatility. Let's bring everything together and then talk about stocks. And by the way, the sector that I'm watching right now very, very closely is communication. I'm watching communication because I look at communication, what happened on Friday. They're very, very strong on Friday. Nice ascending triangle. Now let's see when we broke out of value here. So just to show you guys something, this is the 8-day MA. We're very close to the 8-day MA. But in terms of, where is right here, right here. That's okay. So here's one, and here's the other. That's the VWAP. That's the VWAP, and that's the VWAP right here. So this is the quarterly, and this is the annual. So we're above value on quarterly and annual basis, and we're right above the V line. But look at this breakout. It looks like a nice breakout. Ironically, if you were to track this, you would have gotten a breakout above the quarterly VWAP right here instead of right here. Isn't that something? You would have gotten a break. Look at that right there. Already above the year right here and above the quarter right there. So it really pays to look at these VWAPs. Okay. All right. So that's XLC, and I'm watching XLC. I'd like to see it make a higher high. It's at an all-time high or near all-time high. I'd like to see it make a higher high. If not, it'll probably hit the 200-day moving average. All right. Let's talk a little funny mentals here. Speculation over interest rate cuts by central bank heightened appetite for risk assets. One of the reasons we rallied on Friday. Market participants looked ahead to a lot of data. And again, funds came in on Friday. Caesars, Carl Icahn is buying up Caesars like there's no tomorrow, giving it a big boost. Gap, retail, this is very good for retail. Remember, these retail stores don't just reflect on themselves. They also reflect on the economy. Raj says, is the quarterly VWAP the anchored VWAP for 90 days? It's the anchored VWAP that starts first day of the quarter. Raj, if you haven't checked it out, you should check out did you sign up for the class? Did you watch the class? If not, you should do that. Core PCE prices, key inflation data monitored by the Fed, came in line with expectations. PMI fell. Personal spending rose, which is not good. Personal income rose, which kind of brought that back in line. The data on Friday wasn't really all that great. Here's the trajectory of the interest rates, and now there's a 14% chance they're going to lower rates in July, which I think it's more like 0.1%. I think it's zero chance, which means the bond market has to go down. We've got a slew of earnings this week, and we have a lot of Fed data. CrowdStrike, Bad Bath and Body Works, Lulu, Dollar Tree, Campbell Soups, DocuSign, Neo, HPE. All of those are coming out with numbers. You've got ISM Manufacturing. That's a pretty big report that's coming out in a couple of hours. We got global manufacturing. We've got construction spending. Thank you, JT. I appreciate it. Oh, Richard says the class was a big aha moment. Love it. Love it. Love it. Love it. Many aha moments. That's good. Good, good, good. That makes me very happy. That makes me very, very happy. Yeah. Repost this here. One second. One second. All right. Sorry about that. Many aha moments. Good. Yeah, we're going to be reselling it as a evergreen product. And if you guys haven't gotten into it, you guys should. It really is worth the money I charge for it. It's worth 10 times more than that, but in my opinion. Do you guys think that I charge that I that did you guys change? Do you guys think that boot camp, if I did it live, I could have easily charged $5,000 for it? At least three more times. Good. If you guys haven't got it yet, you should get it. All the three are there, and we're going to do a live session this week, so you could still watch it before we do the live session. All right. So Europe, they're up pretty good this morning, tracking gains in Asia. We have some tailwind from Europe. Thank you, JT. While investors awaited the European Central Bank's interest rate decision later this week, financial tech stocks outperformed across the world. Healthcare stocks have been weak last couple of days. China closed lower today as investors shrugged off upbeat manufacturing data. Private sector survey revealed on Monday that China's manufacturing activity in May experienced fastest growing in 2 years. If they can only get their real estate sector up, driven by robust production and new orders, that means that things are picking up because they don't produce for themselves. They produce for the rest of the world. Carlos says best value for the money all weekend. Good, 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 good. Love that. Love that. Love that. Love that. Love that. Love that. That's fantastic. Fantastic. Moody's on Monday raised Chinese growth forecast. That's important. That's big. Noting the country's post-pandemic manufacturing and export-oriented growth strategy is materializing. If they can only get their stuff together with their real estate sector. Japan closed higher, tracking Friday's gains on Wall Street. Inline U.S. inflation data bolstered expectations for an interest rate cut in the world's largest economy this year. Yeah, right. Let's see if that happens. Financial electronic stocks led the gains on Monday. That's good for us here in the U.S. Global report Monday said that Japan's factory activity expanded in May for the first time in a year, but overall growth remained modest and demand was still subdued, with a weak yen increasing the cost of import items for some producers. That's why you need to interest rates need to go up. GameStop is going up. Nvidia got upgraded again. I talked about that in the Telegram channel over the weekend. That's really good for chip stocks right now. Target fell. That's very bad. They got underperformed. That's very, very bad. But meanwhile, Best Buy got upgraded. So this will cancel each other out. I would be very, very careful. Thank you, JT. That's very, very nice of you. Very, very nice of you. Silver, I'm not really following silver right now, Mazen. Not really following silver right now. All right, so that's my analysis. Now let's talk about top stocks and bottom stocks, okay? And you guys know that my sector that I'm keeping an eye on right now is XLC, okay? Let's do this. Let's start with the short side first. The dog. I told you about this stock, by the way, on Thursday in the pit or Wednesday in the pit. Just FYI. I talked about this stock last week in the pit, Snow. All of these stocks are breaking down. I have not talked about this stock in quite some time, PayC, but it's time to talk about it. APLS. Ooh, look at that. Still hugging the 8-day EMA. I like that. CBOE. Breaking the 200-day line. Good morning, Jeremy. FMX, I gave you the stock about a week ago. I did. And DraftKings also lost on Friday. And I gave you the stock in the pit last week as well. I gave you these as stocks that are on my watch list. I wasn't really hot on trading last week because of the volume, but we made out okay. We didn't do great, but we did okay. All right, now let's talk about the long stocks. THC. Still hugging the 8-day EMA, not that far away. APD. Starting to break the 200-day line. We might have mentioned this stock a couple of times in the last couple of weeks. Still looking pretty good. DuPont. My mother-in-law and my father-in-law, they used to work. This is where they met. They used to work in this company together. Oops. Bank of America's looking pretty good. Looking pretty good around here. RTX still looks good. Skechers. Still looking good. CCJ, a stock from last week. And AR. Still looking pretty good. Somebody says, Steve, you want me to look at FTNT? I'll look at FTNT. It's right at the 8-day EMA. Well, it'll more likely than not just hover around here and just come right back down. It's weaker than crap. I mean, and see, here's the thing. There's a lesson here with this FTNT. So somebody looks at FTNT on Friday. The stock has been going. Look at this. Look, this is my point, and I guess this is. I'll make my point again. So this is FTNT on Thursday. Okay, how does the stock look on Thursday? Now, Steve, I'm not bringing attention to you, but you brought up a good you brought up a good point. So I want to demonstrate this. This is what I was talking about. How a lot of you are not watching the market. You're just watching your favorite stock, and you don't understand what's happening to it, and you get panicky. But when you look at the market with that stock, there's nothing weird going on. So let me show you a good example of what I'm talking about. Let's One second. Okay. Sorry about that. So if you look at the stock on Thursday, the stock is making a new low. It's red. It's below the 200-day. It's a classic bear stock. You look at the stock on Friday and you're like, wait a minute, what's going on here? The stock is moving against me. Well, let's look at the stock on Friday. This is the stock on Friday. Okay. This is the stock on Friday. Hold on. This is FTNT on Friday. This is the SPY on Friday. This is STNT on FTNT on Friday. This is SPY on Friday. Are you noticing any difference? I'm not going to be I'm not doing special requests, Tony the Tiger. If you want a special request, send me an email. No special requests, guys. I have an agenda here. This is not let's see what what Roger thinks of his favorites of my favorite stock hour. So there's a lesson here. What did this stock do on Friday? What did this stock do on Friday? They did the same thing. So how can you say the stock has changed anything about itself? All it's doing is just following the S&P for half an hour, which is normal. It's pretty typical for large cap stocks to follow the S&P. Basically, my point is the stock didn't do anything differently than the S&P on Friday, which means it's just following the S&P. When you have something following the S&P, that's called random trading action. Okay? Also, the stock made a new low on Friday before doing that. The rally came out of nowhere. How could we predict that? You can't predict it. You can't. The way you deal with it is being in the weakest stock or the strongest stock during that rally. See, let me show you. Let me explain to you why. Look why it doesn't matter crazy about pets. I gave you this stock last week as a short. What did the stock do on Friday? I gave you this stock as a short last week. What did it do on Friday? It went down. I gave you this stock last week. What did it do on Friday? It went down. The weaker the stock, the better protection you will have against that. But it does happen. But sometimes, like Fortinet, it's a large cap stock. There's nothing you could do about it. But eventually what will happen is the main trend will take over. So if the S&P intends to go up, but this stock intends to go down, it'll just start going up slower in comparison to the S&P, and eventually it'll run back out of steam. That's why I say the best protection is a good stock, not a stop loss or a spread or an option. The best defense is a strong relative strength stock. That'll give you the best defense for protection to the upside and opposite for the downside. Okay? So again, pick the best stocks and you won't have to worry about it. But to answer your question, Fortinet is exactly why I got those emails. Everybody sent me those damn emails saying, what happened? What happened to my favorite stock Friday? And my answer to them was, I didn't answer the question. I wrote in a question mark, take a look at the S&P 500, same time frame, and then ask me a better question. That was my response to everybody. There's a better question. Because if you see your favorite stock doing the same thing that the S&P is doing, it's randomness. If you see it outperforming the S&P, that's a whole different story. But if you literally see it mimicking the S&P, there's nothing to talk about. That's what it's supposed to do. Think about how many ETFs have FT&T in it. When the S&P goes up, they're buying indexes that have the S&P. That's a major stock in the S&P. How could it not go up? So again, if you don't go offsetting or liquidating good positions when you see the S&P going against you. This happened also on Google last week. Here's another perfect example. Here's a perfect example. Look, what did Google do last week? Roger, should we take loss on our Google? Should we take loss on our Google? And I told you guys last week, Google's not doing anything different than the market. All right, folks, once again, it's June. Five stocks are entering their wealth window. On Wednesday at 1 p.m., I'm going to be talking about it nonstop. Check it out. And also, join me in my VIP room today. It's going to be at noon. And I will see you all there. Also, don't forget to check out Cam White, Customer Service Live, 10 a.m. to 2 p.m. Hit the red button in your customer service members area. Zen Master, I hope you do as well. Hopefully this has been helpful to you guys. If you guys enjoyed this, give me a thumbs up and send me a nice email letting me know how much you like my morning live show, my pre-morning market watch. Roger at rogerscott.com. Have a great week, and I will be heading to the office to give you my play-by-play. And if you're in If you have a live class with T-Buzz today, me and Matt are going to be making a appearance there later today. Just say yes, we're in that class, and we'll see you later today, Roger. Bye. Have a great day today, guys. Bye. Love you all. Thank you so much for the wonderful feedback.